And when you think about these like Michael Saylor-esque strategy plays, the two, I guess, important factors to think about are NAV and volatility. So Microstrategy trades at a premium to its NAV. So the shares are worth more than the underlying Bitcoin. DeFi Development Corp trades similarly. How do those two pieces factor into the business model at DeFi?
Yeah, they're really important. And I'll actually start with the multiple to NAVs. I think it's a really important concept for investors to understand. And frankly, when I was first joining the team, and the thing I had to wrap my head around was that these NAV premiums that exist, 2x, 3x, sometimes as high as like 5 or 7x on some of these vehicles we're seeing, actually are not as irrational as they seem on the surface. And the analogy that I've been giving to TradFi investors to help them maybe understand this a little bit more is to just look at a traditional equity like, say, Microsoft or Meta. You wouldn't look at the value of its balance sheet cash and say, well, it's 10% of the market cap. The thing's at 10x NAV. Let's short Meta and Microsoft because, it's got to compress down to the value of its cash. You're not just paying for the cash as an investor in those companies. You're paying for future earnings accumulation, right? I'm paying for whatever they're going to earn in free cash flow or earnings per share in the following year. Treasury vehicles are more or less the same, right? You're not just paying for the holdings that exist today, but you're actually paying for that company accumulating a certain amount of whatever crypto asset it's going to accumulate in the future. So when we look at our own MNAV, there's obviously some embedded value that the market is giving us for continuing to acquire Solana on a per share basis going forward. So in that light, if you actually went and ran the math on, let's say, MicroStrategy, for example, the underlying multiple that is implied by the market on just its future Bitcoin accumulation, I think last I checked was somewhere around 4 or 5x, just this complicated math to get into it. And you compare it to a company like eBay, which doesn't grow earnings per share, is this legacy business that obviously got clobbered by Amazon, and is traded around 12 times forward earnings forever. And they only really grow EPS through buybacks and things like that. So in that context, when you compare those versus a company that's acquiring an asset that is outperforming the S&P, outperforming most of the Magnificent Seven stocks, in some ways, you might look at those NAV premiums and say, maybe they're actually due to increase rather than compress.